What if I told you one single earnings report could decide whether NVTS becomes one of the biggest semiconductor winners or disappoints investors once again? The surprising part is most people are watching the revenue number, but smart investors are watching something completely different, and that one detail could send the stock much higher or trigger another sell-off. So don't skip this video, because what I'm about to reveal could completely change the way you look at NVTS. Today we're talking about Navitas Semiconductor, ticker symbol NVTS. This company has become one of the most talked about small-cap semiconductor stocks, thanks to its gallium nitride and silicon carbide technology. These advanced chips are designed to improve power efficiency, charge devices faster, reduce energy loss, and power the future of AI data centers, electric vehicles, renewable energy, consumer electronics, and industrial systems. Everything sounds exciting, but here's the question. Can amazing technology actually turn into amazing profits? That is exactly what the upcoming Q2 earnings report may answer. The first thing investors should watch is revenue growth. This is probably the most important number in the report. If NVTS delivers stronger than expected revenue, it would suggest customer demand is improving, and that would be a very positive signal. But if revenue misses expectations, the stock could face heavy selling pressure. The second thing I will be watching is gross margin. Many investors ignore this number, but I think it could be even more important than revenue. Higher margins mean the company is becoming more efficient and earning more money from every product it sells. The third thing to watch is management guidance. This is where the biggest surprises usually happen. Even if earnings are average, strong future guidance can send the stock much higher. But weak guidance can erase all investor excitement within minutes. Now let's talk about AI. AI data centers require enormous amounts of electricity. Power efficiency is becoming more valuable every year. If Navitas continues winning AI customers, this could become one of the biggest long-term growth drivers for the company. Personally, I don't expect overnight miracles. NVTS is still a small growth company. That means volatility is completely normal. But if revenue improves, margins get stronger, and management gives positive guidance, I believe investor confidence could improve significantly. Now let's talk about price prediction. Remember, this is only my personal opinion, not financial advice. If NVTS delivers strong earnings and management raises future expectations, I believe the stock could move towards the $8 to $10 range over the next few months. If results simply match expectations, the stock may continue trading in its current range while investors wait for stronger growth. But if earnings disappoint and guidance becomes weaker, another short-term pullback is definitely possible. Now here comes the biggest twist. Sometimes stocks don't move because earnings are good or bad. They move because expectations were already priced into the price. A company can report record numbers and still fall, or report average numbers and still rally. That is why understanding market expectations is just as important as understanding the earnings report itself. So, buy, hold, or sell if you believe in the future of AI, electric vehicles, and energy-efficient semiconductors. Holding through short-term volatility could make sense. If you're planning to buy, waiting for the market's reaction after earnings may reduce unnecessary risk. Now I want to hear your opinion. Do you think NVTS will beat earnings expectations, or will investors be disappointed once again? Where do you see NVTS trading by the end of this year? Share your prediction in the comments. If you enjoyed this video, please like, subscribe, and turn on notifications, because I'll cover the earnings results as soon as they're released. Thanks for watching. I'll see you in the next video.